Welcome back to News 5. Stock markets have largely dismissed the biggest coordinated effort by the world's central banks since the global financial crisis in 2008. Asian markets closed in the red after the U.S. central bank slashed key rates to near zero in a bid to counter the effects of the COVID-19 pandemic. China's stocks dropped over 3%, while in Hong Kong, the Hang Seng tumbled 4%. Japan and South Korea also logged losses. Over in the U.S., stock losses have put a damper on trading. Wall Street hit critical circuit breaker levels twice last week. That's when trading is temporarily halted if there are wild swings in stock prices. A case in point, the Dow saw the fastest 20% drop in Wall Street history. While investors are struggling to manage a rapidly changing scenario, the Fed has promised emergency action worth $700 billion on top of cutting interest rates to near zero. Central banks in Hong Kong and South Korea are the latest to cut interest rates. Analysts also expect policy easing from Indonesia, Taiwan, and the Philippines this week. Well, the pandemic is sparking a mad rush for the U.S. dollar. The greenback spiked to its highest in 12 years last week. But the Fed and 5 other major central banks have pledged to keep cheap dollars flowing worldwide. They will offer the currency at a cheaper rate and over a longer maturity. That's to make it easier to provide dollars for hard-hit companies. But analysts say this won't immediately help emerging markets also trying to get their hands on the greenback. Currency devaluation might pile on more offshore debt. Now, the coronavirus is wreaking havoc on China's economy. Industrial production has contracted for the first time in 3 decades.